Hey folks, Dan Frio here, the rate update. Today we're going to talk about forbearance and how we can give you an exit strategy. We have a lot of commercials running throughout the country, Facebook ads and Google ads and so forth, just to try to help people, okay? Because people don't have an exit strategy, or millions of people don't have an exit strategy. I'm going to show you the data here. So what I want to go over first is, what is forbearance? And if you're in it, you probably know, but I'm going to define it for you. I'm going to show you the numbers behind all this. And then I'm going to give you your exit strategies, and then one that you do not want to do unless you are forced to, okay? So what is forbearance? Basically, forbearance is a thing that the government and the banks and everybody allowed people to do that have mortgages in last March. They came out with the program and said, okay, here's what we're going to allow you to do. Basically, they learned their lessons from 2008, 2010-ish, when basically the whole world imploded. And those were basically just bad loans, the creation of bad loans. Today's loans aren't bad. People were just put in a really bad situation. Okay, maybe we talk about that at some other time. But what forbearance basically is they came out and said, you know what, you can postpone your payments for 3 months, 6 months, up to 18 months. Well, now, unfortunately, the 18 months is coming due. And so what are people to do? Okay, so what happens is, in most cases, the bank should take that deficiency balance that you have, throw it at the back end of the loan, okay? And they'll create what we call a silent second. They'll say, you owe us 20 grand, we're gonna throw it at the end of the loan, so once you pay on your mortgage for your 30 years, you're gonna have this piece left over that you still need, or you still owe us, and it'll be at zero interest. In the perfect world, that's what you do. But in most cases, or a lot of cases I'm hearing, that's not the fact. That's not what's happening. Okay, so let me give you how you can possibly get out of loans. The first and easiest way to do this is if you're in a VA loan. We would like to help work with you and structure it that we can include your current balance plus all the deficiency balances into one loan. Okay, there's a program that we have that'll allow you to do that. In most cases, we won't need an appraisal done, and we might not even need your income, validation of your income. And you might say, oh, that's just another stupid loan. No, because the parameters behind this is, at the time you entered your forbearance, you had to be current, no late payments for a year. So the thought behind it is, well, you were okay then, you might be okay now, or you're probably okay now, maybe, and we'll verify that, and we'll put you into that program. Okay, so that's the VA program. If you're in a VA loan, we'd love to work with you because we should be able to help you. But the big thing there is you have to be out of, or your forbearance period has to be over with. Okay, the other ones is mostly FHA, USDA, and conventional programs require this. They all require that you have to conclude that forbearance program. But those programs require that you make 3 consecutive payments on time for 3 separate months. You can't make 3 lump sum payments one month and then do it. You have to make 3 monthly consecutive payments, again, after your forbearance agreement concludes or ends, and then we should be able to refinance you. Again, the caveat behind that is you had to have been current at the time you entered the forbearance agreement, and the forbearance must have lapsed or must have ended. You make 3 payments, and then we work with you. We'd love to work with you on figuring out what you should be able to do. A lot of clients that we're working with that have concluded, we're actually getting them out of an FHA loan into a conventional loan at a lower payment, because the average loan that we're working on right now of anybody in forbearance is about 4.875. And the normal rates right now are in the low 3s, high 2s. So you can figure out how that helps you. Okay, so those are the programs, or those are the ways that we could help you or structure your exit strategy. The frustrating thing is the data behind all these numbers. So let's dig into the forbearance numbers briefly. Right now, or then this was just published August 11th, 1.2 million more homeowners to exit forbearance in 2021. 1.2 million more. There's millions that have already came out. Mortgage refinancing is one way to get relief, okay? So that's one thing. If you go down through here, you're going to see many homeowners are coming up at the end of the pandemic-related forbearance period in the coming months, up to 18,000 a day from September to October, recent data shows. And experts are considering options to help these homeowners avoid foreclosure. All right. So the next thing is forbearance exits will likely add to inventory starting in August. Well, this is one of the areas where I always say, I think we're going to have a soft landing on housing. I'm pretty confident with that because these people that are in forbearance, most of them or almost all of them are not negative equity, meaning they have equity in their homes. So they might say, we just can't afford this anymore. We need to sell it instead of going into a foreclosure. If you go into foreclosure, everybody loses. Believe it or not, us as the bank, we lose. We don't want your house. We're not a realtor. We don't want your house. We give you the money. In response, we want the money back. We're not a realtor. You lose, we lose. Everybody loses in a foreclosure situation. Let's dig into the details a little bit more on this page because this was kind of concerning. In August through October 2021, months of housing supply is likely to increase by 15% relative to June of 2021 levels because of forbearance exits. That's the number that I keep saying. I'm like, guys, there's going to be a lot of homes coming on the market. Okay. Additionally, additional supplies from distressed borrowers could represent between 5 and 26% of sales volume over that period. Approximately 850,000 borrowers will exit forbearance in August through October, and because of a strong price appreciation and very few loans with negative equity, open market sales are a realistic option for the majority of distressed borrowers. Meaning, if you still can't afford your house, you most likely have a good equity position in your home that you could sell it, walk away with some money. Okay, that's great. Here's the biggest concerning loop. Over the past year, 25% of borrowers exited forbearance without a plan for returning their mortgage to good standings. That's the concerning part, okay? What I'd like to do is I'd like you to please call us for a consultation. It's free. You can click, I'll show you my website at the end. You can click on there and set up a one-on-one consultation. That's probably the best way to do this. We'll do a Zoom. I want to go through all the paperwork that you have from your mortgage company. I want to see what your mortgage statements look like. I want to see what the forbearance agreements look like and so forth, so we can help you guys with an exit strategy. Here's what you don't want to do. I spoke with an attorney a couple weeks ago, and actually I was on a Facebook live with him last week, and he's working with several people that are working with the bank in regards to a modification. Okay, I don't know if you've been through a modification back in the early 2000s, but it was horrendous. That's when people, they were chasing their tail for months and months and months and months and months to find out all their efforts went to naught because their house got foreclosed on. Here is an instance that's happened to the attorney twice so far. The lender offered a modification to the borrower and said this: here's what we're going to do. You owe us $30,000 in past payments and escrow payments and everything. We're going to take that balance, we're going to throw it at the end of your loan, and we're going to create a second mortgage. Okay? But the frustrating part was this. Then we're going to recast your current loan balance into a 40-year term. And in most cases, the rate is higher than it is currently. But they're going to save you some money. Or they might give you the same payment you're paying today. Well, does that help you? No. I mean, it's putting you in a really bad position. One, it's extending your loan out another 10 years. That's how they're getting your payment equal to what it is today. And they're giving you a higher rate. So my assumption is this. I hope I'm wrong. They're saying, okay, Mr. and Mrs. Homeowner, they owe us this amount. We already took the deficiency balance and added it to the end, but they owe us this amount. We're going to recast that over 40 years. What would it take in interest rate wise to give them the same payment that they're paying today, or maybe $100 less? Well, in most of those cases, the rate is higher, in the tune of at least 1 to 3% higher than they have now. But they feel that they're doing a good deed to the homeowner because they're actually allowing them to just kind of get a fresh start. Please avoid that, because what we might be able to do for you, and I say might because I'd like to talk to you about this, is look at the numbers. Maybe, just maybe, we can consolidate all of it into one so you don't have to pay 40 years and then pay another $20,000 or $30,000 after that. Wonder if we can consolidate all that into a lower rate mortgage for you, recast it over 30 years, not the 40 years. So let's go back to your original term and maybe give you, a little bit of a price relief or a payment relief by saying, okay, we're going to basically let you start fresh, but we're not going to bury you in a hole like the modifications appear to be doing at this time. So that's what I wanted to discuss with you guys. So if you're in a forbearance, anybody in a forbearance, please let them see this video, or at least give them our information so they can reach out to us for some help. So the best way to do this is go to my website. The website is therateupdate.com, and basically do this. Call in our 800 number, 844-775-LOAN. Or even yet, click the calendar, schedule a meeting. You're going to go out there, you're going to pick a day and time that's accessible to you. You're going to let us know if you want to do it by phone or by Zoom. I would prefer you do it by Zoom so we can see your information. What's going to happen is within seconds, you're going to get a confirmation. You're going to be assigned to me or one of my loan advisors, and we're going to talk to you. We're going to be present at the meeting with you, and we're going to go through any and all the options that you have available to you. So we're going to lay that out to you so you have an exit strategy, and then you decide what's best for you and your family. So that's it for today, guys. I hope you liked the video. Please give me a thumbs up if you like it, find it informative. Subscribe down below, hit the bell. Every time I post a video, you get an alert to hopefully make you a more informed homeowner or home buyer. So God bless, guys. Hope to hear from you soon. Take care. Bye-bye.